Good evening, everybody. Hope you're all well. Hope you can all hear me. And thanks again for joining us for another Avenger call on Tuesday, 25th of April. Can't believe we're actually already at the end of April. It's pretty crazy, but 4 months down, 8 to go. And it's probably about a year from now. It keeps on changing every so often, but about a year from now from the halving. So, yeah, time is moving fast. We've had a bit of an interesting week. Certainly within our group, we have. Things have moved in. People have moved a bit more into the market. And we'll explore some of that a little bit later on. No one said that they can't hear me, so I'm going to assume that's a good thing. So what are we going to cover tonight? Well, we're going to have a look at some of the news, as we have been. A bit of focus towards sort of regulation. Unfortunately, that's kind of where most of the news is at the moment. But yeah, we'll stick with that. We're going to have a look at a couple of RT questions. They shouldn't take too long to get through, so we'll run through those. Then I'll have a look at the subject matter for today, which is sell in May and go away. Is that the right move? Is that what we need to be doing, seeing as we're getting pretty close to May and price has been falling recently? So we'll explore that. We'll see how that works out in Bitcoin and cryptocurrency. We do have a research token for tonight. Now, normally when I ask for a research token, I maybe get 1-2 suggestions a week. But I think, this is probably, they all landed on the same day, sort of back end of last week. And that's Kaspa. So everybody, well, not everybody, but a lot of people have asked me to go over Kaspa. So I've researched that as best I can today. I'm going to go through it, give you my honest opinion of where things sit with that. For those of you that have already jumped in, hopefully there's nothing in there that's going to scare you. And for those of you that haven't moved into it yet and still on the sideline, well done, first of all, because you didn't jump in. But also hopefully just give you some food for thought there. After that, we'll obviously go through Bitcoin price. We'll have a look at some of the altcoins. And if you've got any suggestions, please feel free to drop them in the chat. And after that, all I've really got to do is transfer across to the live screen and we will go from there. Let me just move that out of the way. Okay, so 4 charts we've got in front of us, the usual 4 really. Bitcoin, we've had that fall. We had the rejection around about 31,500 and we've come back down. And you can't see it at the moment. We'll look at it a little bit later on. But basically on the daily chart, we've just been resting on the 50 EMA. It's kind of where we are at the moment as well. We had a little bit of an uptick over the last hour or so, but nothing really to write home about. Majority of the other altcoins still in the red, still pulling back. I don't think any of this is anything to necessarily be worried about. Well, unless you got in at 31K. And this is, we'll have a look at whether this is a pullback or the start of an actual dip. And we'll have a look at multiple time frames. The dollar, which is down in the bottom left. So since last week, when we hit just above 100, we've kind of bounced, range back down, come back. But you can see that purple box. That purple box has been on the chart now for quite a while. And actually, I don't know if you can because the camera's in the way of it. It's not in the way on my screen. But I'll just bring it up onto the big screen. Oops, no, I won't. That's not it. Bring dollar up. So here it is. Yeah, so we had that sort of rejection, but we've kind of bounced back, and we're kind of getting squeezed a little bit, I'll admit. So interesting things playing about. We've got some, some pretty big news in the markets this week. Consumer confidence. We've got some earning reports, especially from the Nasdaq point of view. I can't remember the ones that have are coming out after market today, but yeah, it's the usual Meta and I can't remember them all. I'll have a look when we get to that part a little bit later on. So obviously that could have a play on the markets as well. Ethereum, I think, is it's been hit pretty hard from the token unlocks. So we had that run up as everyone was pretty excited that the Shanghai upgrade went well. We then had a spate of actually quite a large amount of withdrawals rather than deposits. And potentially, I've not bothered looking into it, but we're seeing that people are starting to sell off. We'll just have to wait and see. And then on the other side, we've just got the US 500. I just drew a little fancy compression that probably doesn't line up very well. But actually, we can see that we've broken down, and today's been a bit of a hard drop. I've not really followed any of the news today, so I don't know if anything has caused that. But we can explore that one a little bit later on. Evening to everybody in the chat. Thanks for joining us. And what we'll do is we will move into the news. Okay, so potentially the exchange is finally striking back. And Coinbase has actually filed a court action to compel the SEC's response to a rulemaking petition. Now, this actually dates back to July of last year, in which Coinbase sent basically a questionnaire to the SEC. It had about 50 questions in it, and just a lot of yes/no answers in terms of trying to get some understanding about regulation and where that's going to go. In classic SEC style, they haven't responded to that. And so Coinbase today has filed an action with the courts for them to force the SEC to respond to that. Now, I don't know how long that's going to play out, but it's just interesting that Coinbase are actually starting to look to strike back. We know that there's a Wells notice against them, as well as many other exchanges that the SEC has gone after. And I think, without sort of rehashing the Gary Gensler interviews, cross-examinations, Spanish Inquisitions from last week when he appeared in front of Congress, the general feeling has been that the SEC over the last couple of years have just been trying to introduce regulation through enforcement. So not really giving any clear guidance, but then just hitting companies going, oh, by the way, I know we've not told you what's supposed to be going on, but you're breaking the rules, and so we're going to take you to court for that. And you can understand why exchanges and companies are pretty peeved off about that, because how are they supposed to know they're in the wrong, yet they're also trying to run a business at the same time? So they're just continuing with day-to-day activities. They're asking for advice from the SEC. It's not coming their way, and they still get stung for apparently breaking the rules. So we'll see where that one comes out, and we'll see how that progresses over the coming months. Mr. Attackers has put Google, Amazon, Meta, Microsoft this week. There you go. And it's Microsoft and Google today for the earnings. So that will be after markets close. So around about 9:30 tonight, UK time. Moving on to the next one. Again, just with the way that the United States is still continuing to play, and every week after week we talk about a different exchange or a different company. Let's decide, we've had enough with the United States. We're considering moving. So Coinbase actually announced last week that they are looking, and they wouldn't be adverse to finding a new country for their headquarters to be based out of. Where that is, they didn't really explain. It's kind of a throwaway comment that Brian Armstrong made whilst in London. And now the Winklevi have also suggested that they're looking to set up a derivatives exchange outside the United States. Now, that doesn't surprise me, and in one bit, because the United States has particularly difficult laws on that anyway, and you can see the likes of Binance and Bybit and everyone else have restricted access for derivative platforms for the citizens of the United States. Whether or not people can get around that's another story. But Gemini here have actually registered for a virtual asset license in Bermuda, and they're looking to set up. Apologies. That's Coinbase Global have looked for a license in Bermuda. And Gemini are looking somewhere in Asia for theirs. So again, just more evidence that some of the big players in the United States are just not really feeling the vibe at the moment. And with how small the world kind of is now, especially in the crypto space and technology, it's no major thing for them to be able to relocate somewhere else and ultimately still get the reach they currently have, if not more from it. So makes perfect sense to me. And this is starting to be felt by, I'm going to struggle with this, but Chamath Palihapitiya, hopefully I said that correctly. Put the inflection at the end just in case. He is a crypto bull, tech billionaire. We'll go for this in a minute, but he's kind of conceded that crypto is actually dead in America. And he goes on to say that regulators in the United States have choked out the cryptocurrency sector to the point of death, according to Bitcoin bull and billionaire tech investor Chamath. Crypto is dead in America, he boldly claimed. A comment came in response to the news that the crypto exchange Coinbase is now considering a move offshore, which we covered last week. And he pointed the finger solely at Gary Gensler. You now have Gary even blaming the banking crisis on crypto. And last week, while he was under questioning, he very quickly turned the SVB, Silicon Valley Bank issue, and blamed that solely on crypto and the depegging of USDC, when most of us who actually, I want to say lived through that experience, but certainly watched it happen, know that there was a run on SVB, but because so much of the USDC token was there, that's what caused the depegging. However, we know that has recovered. But it's funny how Gary Gensler just sort of flipped those facts around. I didn't watch that particular part of the interview, so I don't know if he was called out on it or not. But yeah, we're starting to see, tech investors are also suggesting that this isn't the place, and these are the old. Sorry, spit my words out there. Ultimately, these billionaires are the type of people that companies may go to for funding and everything else. And if they're already suggesting that they're not particularly interested because they think crypto's being choked out in America, maybe they have to look to go offshore and invest in other ones. Of course, any US based startups may start thinking that maybe they should also start their crypto journey outside the United States. So again, just keeps on adding up, and unfortunately it just isn't looking good. And yet, in stark contrast, the EU Parliament greenlights the landmark MiCA regulations for digital assets. So that's Markets in Crypto Assets Act, or the MiCA regulation. So last Thursday it was voted on. It's pretty much a landslide victory. I think it's 517 votes for and about 38 against. Now, that doesn't mean that it's actually law yet. It's just effectively passed its first hurdle. It's got to be, I don't know what the technical term is, but ratified or whatever you want to call it in June. And should it go ahead, then we're probably looking actually about Q4 2024, maybe the early part of 2025 before it comes into place. But, that assurance that regulation is coming and will now be worked on can provide some comfort in the EU. And again, it's just proving that actually, while the US is really stifling this industry and innovation there are other major sectors around the world, I'll include Asia in that are actually opening up to cryptocurrencies. And we've all said it for the last year or so that, regulations is a major step forward for this to be, adopted by the masses. And so that for me is a positive thing. Now, I've just brought this article up here, but I'm not going to bother going through it because it's quite a long article, but I wanted to just show you it so you can have a look at what it is. But this kind of details some of the sectors that the Act is going to cover. So there'll be stable coins will be covered within there. How it will actually impact the stable coins is covered. It'll talk about the asset service providers and what they can sort of find. God, I've lost my train of thought again. What regulations they will need to abide by. Again, market abuse. So any nefarious characters. We've got a few of those in 2022. Well, that means issuers, decentralized crypto and unique NFTs, they're exempt from it. So that sort of will be clearly explained. I was going to say it is, but it will be. And then there's a little summary there of what the overall impact is. But instead of me reading through that verbatim, I'll just post it in the group and hopefully you can all read that at your own leisure. And then the final thing for me just to cover in the news section, and it's not a massive news announcement, it's more just to bring you guys to awareness, because I know some of you actually do trade on Bybit. Some of you may even actually spot buy on Bybit. I've started doing a little bit of spot buy on Bybit. But just to let you know that it is mandatory for KYC starting from the 8th of May. So at the moment, you don't have to go through the KYC, but you are limited to $20,000 worth of withdrawals per day. And, for most of us, we're probably not looking to bring that much out in any one go. But from the 8th of May onwards, you'll have to, if you want anything, you will have to go through the KYC process. And if you don't, basically, they won't auto-close any of your positions, but the only thing you'll be able to do is close any existing open positions or orders, or withdraw. And then any trading activities will be restricted. So for those of you that aren't a particular fan of centralized exchanges, unfortunately, it's either you have to bite the bullet here and stay with Bybit, or you have to move to the others like GMX, etc., in which you may be able to carry on your trading activities over there, but just be cautious of the fees. I've never used GMX, and I'm going to talk about GMX a little bit later on, but I went through the process. I'm not particularly that afraid of centralized exchanges because I treat them as just an on and off ramp. And once I've done my transactions, I move things off into wallets. So I'm more than happy for that to be captured. And to be perfectly honest, I do provide a tax return every year. So, using these exchanges, it just makes it so much easier for the API to pick it all up when I'm doing those. So I've gone through it. One of the things that I actually don't like about Bybit, though, and this is maybe just me, is when you want to go through a spot purchase, even though I've got 2FA, and you've got all the other security factors. It then also asks you for your facial recognition if you want to do anything, any spot purchase or any withdrawal. And that's quite annoying because I'm doing it on my desktop for whatever reason. Although the camera picks it up, it always says it needs to retake it. Then I have to stop what I'm doing, go onto my mobile, and then it does it first time. So I don't know if that's a bug just with my camera or it's a glitch in the UI or whatever, but I find it quite frustrating. But I would like to do more spot buys on Bybit. They have some pretty good rates and talk about maker-taker fees are, in my opinion, a lot lower on most of the assets that they have. Obviously, they don't have the breadth and depth that the likes of Binance does. But I just want to try and give it a fair run on it. So I'm starting to use it a little bit, but I'm still not really derivatives trading at the moment. Okay, that's the end of the news section. I don't think there's any questions or anything that's come through yet. Hopefully that's a sign of a good thing. So we'll move on to covering a couple of the RT questions. There's only 3, really. So Remy's put, is there anything I should look for when getting a new crypto laptop? I mean, unfortunately, this is kind of as long as a piece of string. What I would say is, depends if you are dead set about it just being a crypto laptop. Because if it is just a crypto laptop, then you don't need to go overboard for it. And I would actually argue that having less storage, having less processing power, everything else would potentially maybe help you to just keep it as a crypto laptop. Because, you know, if you get an all singing, all dancing one, then before you know it, you're surfing the internet, you're streaming, you're downloading whatever content and everything else. And suddenly the whole reason why you had that crypto laptop for security reasons has now gone out the window. So for me, you know, I have a tablet for my crypto laptop, just with a keyboard that's attached to it. So for me, because I remember the days of time when you had to take your laptop everywhere, I just like it to be small, lightweight. You know, yes, it doesn't have to be something out of the 1980s or anything like that, but it doesn't have to be the latest Apple MacBook, sorry, I'm spitting my words out here, that's just come out. So whatever suits you in terms of security and everything else, you know, just have a think about what sort of security measures you want on there. I've got VPNs, I've also got antivirus software and everything else that I use. When I deal with actual crypto transactions and engaging with sort of my exchanges, I use a different God, I'm struggling with my words today. I don't use Chrome, I use Brave instead. So I don't think that really makes too much of a difference, but you know, I just do it just because I actually don't know why I do it, but I do. And then I just keep any other sort of like research activities just based on Chrome. So I don't really know how to answer that. I'm sure there's other people in the chat or in the group that may have a better understanding, but just don't go overboard. I mean, just think every pound over what you want to pay is less Bitcoin or cryptos that you could have ended up buying and then reaping the benefits for in years down the line. So that's probably what I'll say about that. Excuse me. Manny's put, can you give a brief in the next Avengers call where you are storing and staking your DOT and Glimmer? That's fine. Yep. So there are quite a few places that you can store these. For my DOT, I am using the Fearless wallet. So this is a native, it's a Android and iOS wallet solely for the Polkadot and Kusama networks. So you can just download it. It's pretty decent UI. There's just a separate button then to click on for staking. And when you go through the Fearless wallet, staking your DOT, you cannot. I don't know if you can stake the Moonbeam on there because I stake mine somewhere else. But anyway, yeah, you have to have a certain amount of validators, and that can be a bit of a pain to work them out. So it can auto-select those for you. So there is some relatively simple functions. Just bear in mind, if you are going to stake on Fearless, you do get a fairly decent return, anywhere from, I think it's 15 to 19%. I'm averaging about 16% at the moment. However, the lockup period, or the unlock period, should I say, is 28 days. So when you ask to unlock, it's going to take you 28 days to get it back. So that might not be something that you are interested in. What I would say is you could go down the other route of using Kraken, which is what we all did in the last bull run bear market. the FUD around exchanges seems to have sort of washed away now. And there's two options you can do there. You can do the 28-day lockup and you'll get the similar kind of APR, or you can do an immediate unlock and you get a much reduced APR. I think it's anywhere from 9 to about 11%, but within an hour you can have your dot back. So depending on how comfortable you're feeling with your holdings of Polkadot, there's another option there with Kraken. There's plenty of other exchanges you can have a look at. There's one other wallet you could use, which is the Nova wallet. I didn't actually bring it up. I don't use it myself because Fearless does the job. But yeah, Nova, Nova. In terms of Moonbeam, so I just use the Moonbeam app. So this, just bear in mind, this is not secured by my Trezor or anything. I've actually moved it in. But if you just go to moonbeam.network and then you'll see this pink button in the corner, launch app. You hit that and it'll take you to a page that looks like this. And then when you connect your wallet, you'll have your balance and everything else. And then it'll give you how you can go through the staking. But effectively, you just go through staking. You can have a look. You have to select your collator. And if you're a bit confused how to do that, Manny, what I will do, I did a video for this, which is in Vimo. If you just go into Avenger videos, there's how to stake Glimmer. The UI has actually changed. It's about a year old. But in terms of how to locate a collator, which ones to go for, what you can expect in terms of what they do and what the problems might be, and have a look at that. Again, just to bear in mind that if you're using Moonbeam, it's a 7-day unlock. So when you click, you want to unlock, you have to come around in 7 days. And then once that's passed, you can then remove your token. So again, it's not exactly a rapid process, but we are where we are with that one. Final one, probably a little late but a review of Hector Finance might be good. They've done a lot over the last year, but is it of any value? I probably won't be going in again, but it'd be nice to see how you assess progress made by the organization. It was a little late. She dropped it today, so I haven't been able to do a proper review. I have no idea what they have done over the last year, but just to cheer myself up a little bit, I did bring the chart up, and here we are. So, yeah, it's pretty flat. It's been flat for a very long time. Now, some of you may say that's a perfect time to accumulate. For me, I will not touch this or any other of these rebasing DAOs with a barge pole. I think their time is done. I even remember Simon at the end of the last trading pub saying he was considering going back into Ohm. I can't see why at all. The staking rewards are incredibly low to what they were 18 months ago. So I just don't see where it really is. Now, this one's gone from $360 down to $2.76. So yeah, but there's no chance it's getting anywhere near all-time high. Now, this on the linear chart, so that looks pretty bad, but it is bad. That's a hell of a fall from grace. Put it on the log chart. It's a little bit better, but we're still in making fantastic lower highs and lower lows. This hasn't broken any sort of trend yet. So for me, without even looking at what they've done, and they could have completely reinvented it, until it breaks the trend, starts making some higher highs and then some higher lows, I wouldn't be interested regardless. It'd be the same kind of tokenomics I'd be looking at. So, but what I will do is I will go and have a quick look before next week's call, just see if there's anything of interest, and just maybe it will shock me, and there will be something completely different, and yeah, I'd be happy to go back in. But I was never in Hector in the first place, so but I will have a look. I'm not even going to bother wasting people's time looking at Ohm and Wonderland and all that kind of stuff. We know where they were. Most DAOs, rebasing DAOs anyway, are like this, and they haven't really seen the recovery that we saw before. Obviously there's still people that seem to be holding them, but anyway, that's where we are with that. And I think that was the last question I had there. So thanks for sending those through. Again, just a little plug that if you want me to sort of come into a call with a bit wider knowledge, then just drop us a question. Don't matter how personalized to you it is, or whether or not it's going to answer a burning question that the entire group has. Just ask it on the spreadsheet. I'll do a little bit of research before the call, and then yeah, I can answer it a bit better. I'm never afraid not to answer a question if you put it in chat now, but I don't know if I'm always going to get there. Greg's put charting question. BTC and ETH are currently showing a high test on the monthly time frame. Do you think these could be meaningful? Greg, we'll have a look at those later. All I would say is there's still 5 days till the end of the month, and stranger things have happened for BTC to say get back up to 30,000, and that high test has gone. So, with those candles, I've always been of the opinion, whether it's the 1 hour, the 4 hour, for me, halos, I don't play a halo until that candle's closed, because even in the last second, Bitcoin could go from 27,000 to 31,000. It's a totally different picture. So, but we will have a little bit of a better look, and we'll go on to the monthly time frame when we have a look at those as well, and we'll check them out. Right. Okay. So, here it is. Should you sell in May and go away? Now, this article was written in 2021. It was actually a pretty decent article, which kind of goes through sort of what the whole premise behind this is. But why have I brought it up? And why did I make that thumbnail today based on it? And it's because of this. So what I've done is I've searched sell in May. I put a filter on of just in the last month, and you can see the amount of videos. I don't even have to nearly slow this down. They're all still sell in May. Yeah, there's stocks as well as crypto, but we're still talking about sell in May, sell in May. And it seems to be the sell in May, go away strategy, all of that. Go away in May. It doesn't matter where we go. People are talking about it. And we're obviously getting close to May. And so I was seeing on crypto Twitter and on YouTube that these videos were picking up and picking up and picking up. And the real question is, well, one, is that necessarily the case in the traditional markets? And actually, is it really the case within the crypto markets? And I'll be honest, until I looked into this, I didn't actually know the answer. So I thought it'd be a useful thing to go through. We can have a look at sort of what has happened over the past 14 years or so. And then from there, we can, I think it's about 12 years because the data doesn't go all the way that way back. We can go from there. But in terms of, excuse me, there will be a bit of reading of this article just to try and refresh anyone's memory on it. And for those of you that aren't really aware of this term, although if you've been trading for at least 12 months, you surely must have come across it. For decades, the idea that you should sell in May has been an important part of stock market folklore. It's sometimes called the Halloween indicator, since you buy back in October. But of course, investing should not be that easy. But the odd thing is that compared with other rules, this one has come up rather well over history. And so basically, looking historically over many decades, the markets have tended to return closer to 1% over the May to October period than the 5% during the winter months on average. For most countries, the data is from 2019 to 2017. So, 1919. So we've got nearly 100 years worth of data from 65 different countries. And it even says, strangely says here, where apparently Mauritius is the exception to the rule where this doesn't seem to hold, which is quite interesting, really. That there's certain countries that don't. There's also, it goes in here, short-term trading can have tax consequences. So, although you may, there may only be a small percentage difference. If you've got to pay the tax, then actually you may offset any gains you could possibly have. And now what was interesting there is they say I am struggling today, I don't know why, May to October. But I've always been led to believe it was actually May till August, sort of about a 3-month period. So I'll be honest, when I go through what I've done, it's more of a 3-month outlook there. So let's have a look. So here's Bitcoin. This is the monthly chart. Sorry if it looks a little bit messy. I'll try and space it out a little bit. But effectively, dating all the way back from 2012. So I've got 10 of these. What I've done is just the blue line, which is covered by the orange box, represents the beginning of May. And then it's a 3-month candle to the August. And you can just kind of see, and you can kind of actually get, depends how close you want to look at it, a sort of a visual representation of, I don't know, there's a kind of even balance, I'd say, just looking at it without going through the data, that it's either an uptick or it's a downtick, and there's never really that many that have stood out. It's not like there's loads of downticks compared to upticks. So that's interesting in that kind of seems to balance itself out, which potentially goes against what the traditional markets experience. And there may be added reasons as to why that is. if we start then adding in some of the figures, and I did a spreadsheet and I've gone and closed it, so just bear with me a second. There it is. Let's bring this back up now. Oops. So this is exactly the same, but this time I've just put the price on there. That can be a little bit confusing, because it can be hard to see. So here's one I did earlier, and I'll just zoom in a bit. This is the data that you can see. So in May 12, and this is for a 3-month period, bear in mind, there was a 91% uptick, which actually only equated to $4. So I kind of take column C with a pinch of salt, because at the time $4 was an awful lot compared to the price of Bitcoin. But yeah, a year later we actually saw a 60% drop over that 3-month period. And May 14th was about a 30% increase. May 15th, May 15, 20%. 16 was a 36%. May 7th, 2017 was 112%. May 2018, we actually saw a 17% decrease, but in May 19, it was a 95% increase. And then for the last 3 years, we've actually seen a bloody period, bloody summer, really, with nearly 30% in 2020 and 2021, and actually 37% between May, June, and July of 2022, which isn't surprising when you think we had FTX and Celsius over those periods. So yeah, kind of interesting there. But what also stands out is there is actually 6 occasions where it's been positive and 5 where it's been negative. And if you take the average of it all, then it's about a 19% increase. So already we're kind of seeing that maybe there isn't a real necessity to sell in May and go away. And actually maybe does Bitcoin, well, it is only Bitcoin I've had a look at. Can't speak for the rest of the crypto market, bucks the traditional market in that sense. But there are other things that I take into account. Not everyone buys into it, I appreciate, but that's the 4-year cycle. And when we annotate where the 4-year cycles are as well, then that might also help us understand. So got to try and think where they happen now. I've got a separate chart, that's why. Apologies there, let's just duplicate that. If I can remember where I put them. Nope, not that one. The problem with having so many 4-year monthly targets. There we go. And just move that across to this one. Okay, we got there in the end. Should have had it set up. So it was November 12th, July 16th, May 2020, and then anywhere from March to May 2024 is where we're looking at the next one. So if we just go back now, we'll try and what am I on here? No idea. Try and factor those ones in. So end of, move this out of the way so you can see it, and move this across so you can see it ahead of the camera. So November we had the halvening, and we know, when the supply starts to dry up, that normally drives demand. So then we suddenly had an uptick lead into this, but then it cooled off within that May period, as it's unsustainable, such a large one. Then we go into May 16, and actually this July month was when the halvening happened, and so that was effectively the start of the 2016-2017 bull run, which led to an incredible uptick, in those periods. So again, had an impact within it. 2020. Where were we here? I think it was bang on May, wasn't it? This was a bit of an outlier, I think, because I often wonder what would have happened to Bitcoin had the COVID incident not taken place. But it did, and that's what that downtick was there. But ultimately, why have I got that in red? That one has to be a positive. I think the colour's just wrong, it's just thrown me. There we go. And this one again, it dried up because of the halvening, and then we saw the uptick. So that can certainly take an effect. Now, people would then go as far to say, well, you also have political events and you have midterm elections, and you have the actual election themselves, which happen basically every 2 years, and how that can affect it. And I kind of have to agree with that. Now, this year that we're going, well, 2022, which was a particularly turbulent time for the markets, we had the midterms that year. So traditional markets don't really like uncertainty, leads to volatility, and a whole load of other issues led to the markets dropping down last year. And we saw a particularly large sell-off then. So yeah, there's definitely that to play. Now, this year, we don't really have any political events, certainly from the US calendar. But next year, when the halvening happens, we actually do. So we've got that uncertainty, which leads to volatility. We've also got the halvening event. So it could be an interesting one in terms of where we go with 2024. And I think that sort of goes back to that original article, which suggests that, this is a trend, but it doesn't mean it happens every single time. But for me, Bitcoin, over its 12 years that we've documented there, has actually shown pretty good resilience to the sell in May and go away. The only issue you really have is the last 3 years have been completely against that. And if we kind of say there were two at 30% and one at 37%, so we're kind of looking in and around, well, let's just call it 30% again. Where could that potentially take us if that were to happen? We can tie that into some other stuff we're going to look at a little bit later on, but let's just say that the market closes. There's your monthly high test that you were talking about, Greg. But let's just say it closes where we are at the moment. What's 30% over the next 3 months from there? That'll take us back down to around about 18,000. So we're following what we've done over the last 3 years, then yeah, we could look to see a bit of a retest. I think the ones from 2022 and 2021 felt so bad because we were at 64,000 in April of 21, and obviously we'd hit 69,000 in November when we were working our way down. So the actual dollar values felt a lot greater than what, from the percentage side. Arguably, we're at 27,000 and 30% around about a 9,000 loss. There used to be days where we'd lose $10,000 on Bitcoin. So yeah, it could certainly happen. I think it's something to look out for. Will I personally be selling? Well, if it's only going to be 30%, probably not, because that kind of is, I would be in the red, but I'd be much closer to where I got back in to the market. So I'd feel relatively comfortable within that position. And ultimately, I'm again, by the time that's finished, we're only about 6 to 9 months out from the halvening. We're kind of in that reset stage and potentially looking for that climb back out towards a halvening and then the burst beyond that. So I probably wouldn't be selling. But as I said, the data kind of suggests that maybe we don't need to. And if we have a look at it from, you've probably seen me put this chart before, but this is the percentage monthly returns for BTC over its entire lifetime. And you look at May. May's not happened yet. So remember the figures I showed on the last one were over the 3 month periods. But if you look at May, so yeah, 15 and 35% in the last two there. 2020 was positive, 19 was positive. We actually only had, what's that? 5 months where it was red in May, and then 2, 4, 6, 7 months where it was green. And if you look at concurrent months, again, May and June have been pretty bad over the last couple of years, and similarly in 2018 and in 2013 we had that. But other than that, every other year has been green, or only one of the months in red, and that month in particular has been low value, 2% and 3%. So just looking at the data we have there, and I have to stress we've only got 12 previous years of this data, so it's not that much to go from. It suggests that actually over 50% of the time we see green across the board. Now, you have a look at the end of the summer, in August and September. September's a brutal month for Bitcoin. And if you were ever to sell in a month, statistically, September is the month that you'd want to sell. And over that 12 periods, we got 2, 4, 6, 8, 10. Oh, so we've actually got 13 there because we got the 2010 data. So we've got 10 out of 13 months are red. And so really, what we're actually seeing is, certainly for Bitcoin, I would suggest for the crypto market, it's not necessarily May that's the impact, it's September. Now, the comeback in October, the Halloween event, the Christmas run-up does seem to stand the test of time. And Alessio Rastini, he talks about that pretty much every year, the Halloween run. And so maybe actually you only get to step away from crypto for 1 month of the year rather than either 3 to 6 months, which is what the traditional markets do. But it is interesting. We do see, I've not gone through these videos that are on YouTube. I think people could typically use it just as clickbait. I suppose for me, just for you guys now, it's just a case of, you know, if you see that video and you end up watching it, just have, you know, just make sure that you're happy that they are actually covering this kind of information, try and give a balanced argument, rather than it just being a little bit clickbait. You can draw your own conclusions, and I'm sure if it's a well thought out video, someone's going to come up with, you know, a decent amount of insight. They're not going to be stumbling over their words and trying to spit stuff out like I just was. But yeah, the average down here kind of says a lot for me. And really, you know, you look at Bitcoin as a whole across the year, across the entire year, August and September are the only 2 months, and August is only just a red month. It's September typically that is the worst month. October and April are probably the best. But May at 21% is the 4th highest month. So it certainly doesn't seem to me that the sell in May, go away mantra works for BTC. But, you know, have a think about it. I'd love to hear anyone's feedback they've got on that as well. And yeah, we can take it from there. Right. I think it's time to do the research token. Actually, I'll just have a quick. Chris, but interestingly, 4 of the last 5 years were negative though. Over the 3-month period. Yeah. So, I mean, you could argue then that is there a change in sort of like popularity within cryptocurrency? So back in the olden days, we had just the diehards that were just mining it and hoarding it. And I completely get that. You're right. I don't think we should not consider that. And perhaps I haven't considered that one as well as it should have done. But there's always those people who will say the data's the data. And that's what it suggests. But yeah, I get you there. And is it arguably, like you say, institutions have been involved for the last 5 years, and so they're following the playbook that they would use in traditional finance? Yeah. Maybe BTCs get more correlated with stocks over the last 3 years. Yeah. And if it is being driven by institutions that are used to trading the stock market, why wouldn't they try and use the same playbook? So, okay, I'll take that one on board. Right. So let's have a look at Kaspa. So, I'll be honest, I had never heard of Kaspa until last week. I didn't know what it was, wasn't really looking at anything particularly about this. And up until today, I hadn't really done too much research on it. I kind of knew I was going to talk about it over the weekend. So I started collecting some, you know, web pages and articles and that. But I really today and a bit of yesterday went through it all. So I did watch the video back. I wasn't on the live call on Thursday. I did watch it back. And I think Simon does cover some aspects of what Kaspa is. I'm hopefully going to provide a more sort of thorough and rounded view of where Kaspa is. It is by no means an extensive understanding of it, and I'm certainly not going to be going into block DAG or how the Ghost protocol, which is the basis behind it all, works, because one, after watching videos on it a few times, after reading the articles about 4 or 5 times, I feel more confused than enlightened about any of that. So let's just see where we go. But what is Kaspa and why is it suddenly on our radar? Well, it is a layer 1 blockchain. Now, it uses this block DAG technology, which I'll try and go over in a little bit, to essentially solve the scalability trilemma. Now, where have we heard that before? Only 2 weeks ago when we were talking about Oasis Network, and they thought they'd cracked the scalability trilemma. But again, for those of you that haven't seen that video or weren't on the call a couple of weeks ago, With blockchains, it's called the scalability trilemma, but also the blockchain trilemma as well. You've got three prongs to that. You've got decentralization, you've got security, and you've got scalability. And what we found certainly within the earlier days and what people are trying to crack is you could only really ever meet two of those properly, and it was always at the cost of another. And what we found with Bitcoin, for example, when it was its layer one, was that it was decentralized and it was very secure, but it wasn't very scalable and transactions were particularly slow. And so something had to be done about that. So you have a layer one, any layer one, which is kind of the base protocol. It's a consensus model of how that is going to work. But then you have these things called layer twos, and they're often referred to as the scalability layer. And for Bitcoin, that was the Lightning Network. For Ethereum, you got things like Polygon, etc., that just provide scalability, speed up the amount of transactions that can take place, etc., etc. And then you may hear, although it's not particularly relevant for what we're going to talk about today, people talk about layer threes. Now, layer threes are just decentralized apps that are actually built off those. So OpenSea is a prime example. And yeah, I'd say it's not necessarily relevant here. Now, Kaspa has effectively based itself on the Bitcoin consensus model. It's a proof of work model, so it is mineable. So blocks are mined, and then that it releases tokens within the ecosystem, etc. But it doesn't use a blockchain. Now, Simon drew a picture of that, if you remember, just blocks effectively stood on top of each other going vertically. The blocks contain the information, and there's a chain, which is like the hash transaction key, which kind of links them all together. But what the DAG does, and there is a beautiful little illustration of this. Here we go. So this is a visual illustration of the Kaspa network as we go along. Now, if only I could just click back. So what you've got is, there we go, because you can actually click on these, doesn't matter. But in this section here, which is in the middle of the screen, it might move along in a second. Rather than having blocks piled up on top of each other, you have many nodes that are separated out. Now, the visual representation here is linearly, but with gaps within them. And it uses this ghost protocol, which I've written down what it means. It's greedy, heaviest, observed subtree protocol. Brilliant. So now everyone's clear on what that is. But basically, originally it was suggested that if you wanted to speed up your transactions, it was at the cost of security. But Ghost effectively solved this, because what it would do is it would portion off similar, what's the word I'm looking for? I'm struggling with my words today. I want to say transactions. I'm just going to say transactions for the argument. I'll wait till I get to the actual page to correct myself if I am wrong, and it'll group those together in sort of whatever strength they need to be, so things can happen concurrently. And these are set up in isolated nodes, so you don't have to wait for one block to complete. You can have multiple blocks happening at any one time, but you still have security within that, much like when we were talking about Near Protocol, when we've been talking about Rose as well, or Oasis Network, because they actually do link and tie back to each other. So suddenly now what we've got is we've got a proof of work consensus mechanism using blockchain technology. We haven't talked about it, but it is very decentralized. It is very secure because of the protocol that it's been using, but actually it's incredibly scalable now. And although I have mined in the past, I started looking into this mining and it uses optical mining. I actually don't know what that necessarily means, so you'll have to forgive me on that. But if we can now speed up what this is doing, you can kind of see that it is portioning off different ones at simultaneous times, and these arrows are linking back to it to suggest that there is still some sort of chain that this is following. Obviously, there are times where blocks can just be completed in one instance. Now, unlike with Bitcoin, and hopefully you guys are all still with me here, unlike with Bitcoin where each block takes approximately 10 minutes, with Kaspa, each block is mined every second. So, it's incredibly fast. And in terms of scalability, now I take all this kind of stuff with a bit of a pinch of salt, but it now claims that it's the world's first block DAD. Is it on this one where it says this? Yeah, Kaspa is the fastest open source, decentralized, fully scalable layer one in the world. I don't know if that's true, or if that's just a piece of marketing. Certainly the technology that they're using behind that suggests that potentially maybe it is. Let's try and dive into it a little bit more and correct most of those mistakes that I've just gone and made. So it is the fastest and most scalable instant confirmation transaction layer ever built on a proof of work engine. And what you've kind of got here, so because you've got the extra benefit and added security you get with the proof of work mechanism, which everybody liked, but it was too slow. But by using this block DAG, you get all the benefits of proof of work, but then you also get the scalability, which you get typically from the proof of stake consensus model. So they're actually getting the best of both worlds there. Going back into the narrative here, transactions sent to miners can be included immediately on the ledger, which is structured as a revolutionary block DAG. It uses this Ghost DAG Phantom protocol. Now, why does everyone go on about this Ghost DAG Phantom protocol? Well, because the guys that came up with it were actually cited in the Ethereum white paper back in 2014 when it came out. Got to scroll down to it, but I'll get there. Here we go. So, right, modified Ghost implementation, and they actually talk about the greedy heaviest observed subtree Ghost protocol is an innovative innovation first introduced by Jonathan Sompolensky and Avi Zohar in December 2013. So Vitalik was actually already talking about this would be a great place for Ethereum to go through, and so this has been around for an incredibly long time. I can't remember where I've put this in here. Maybe I've skipped over the team. I didn't. Here we go. The contributors. So Johan Sobolensky, I think he's the one that does like quantum cryptographics. He's written quite a lot of papers that have been published through Harvard and a few other places. Incredibly intelligent person, clearly understands this stuff, and it's been around this kind of technology for an incredibly long time. Again, his mentor, if you will, Professor Zohar, goes on to talk about how they produce that together. He's got like a Medium page. He's done loads of articles in there about it all. And interestingly, he also talks within those articles about how they are adapting this for the Kaspa network. So some incredibly intelligent people within there. Michael Sutton's pretty well known within this kind of stuff. I mean, I admit I didn't know him, but everyone seems to be singing his praises that I've been researching from. So they do have a strong team and some core developers. But it is decentralized, and I'll get onto that in a second. So these guys are the brains behind the consensus model that they're using. But now that it's up and out there, it's free for everyone to use. I keep going back to that page, thinking that's the one I want, but it isn't. So we talked about the trilemma in terms of fast confirmation, high throughput, so it's the security side of things, and mining decentralization. And what's interesting is that the way that they have manage the consensus mechanism layer and the speed of the block rate can decrease depending on your mining capability or outputs. And so if you think about Bitcoin, whenever you hear about one guy who managed to solve the Bitcoin equation for that particular block and get the full reward, it's an absolute miracle that that's happened, because you actually need high computational power to be able to do that. Well, it's different with Kaspa. So what that means is you don't actually need large mining pools to mine this, and anybody can mine it with any PC. So that's why you also get loads of individual miners, and because the transactions so the blocks being released every second, then the rewards keep on coming thick and fast, and there's nobody. Well, there is still competition, but you're not waiting every 10 minutes to see if you can win a reward. Obviously, within that period, you would have 600 blocks being mined. So that makes it more decentralized because there's a lot more doing it, and you don't have. I assume there probably are still mining pools, but they're not as many as, and certainly not as big as Bitcoin. So you've got lots of different miners out there dealing with it. In terms of the vision, so I don't think I touched on this, but I think Siam did. It is following from the narrative from Bitcoin. It wants to be the world's best and foremost peer-to-peer electronic cash system. What it's basically saying is that that's how Bitcoin started out, but because it was so slow, it actually became more of a store of value, much like gold. And yes, it says it in the narrative here, but for those of you that are fluent in Aramaic, like I am, obviously, Kaspa in Aramaic actually means silver, and that's what they're trying to go with. This is they're looking at this as the step down from gold. It's silver, because silver was, once gold became a store of value rather than a medium of exchange, silver took over because it was more plentiful, it was easier to break down, and people still saw the value that was within it. That's exactly where their vision is with Kaspa. They want to keep to the same consensus model and mechanism that Nakamoto thought of within the Bitcoin white paper and how Bitcoin works, but they're just taking it a step down. They're going away from that store value. They still want it to be a peer-to-peer electronic cash system. And yeah, everything else goes through that, so that's fine. Talked about the contributions. I mean, I don't really know a lot of these people, I'll be perfectly honest, and I'd never heard of even Jonathan Sublinsky until 2 days ago. But there's a team if you are interested in who's there. One of the things we always talk about, though, is tokenomics. And so, excuse me, Kaspa was actually launched. This way, the charts only go back to the middle of 2022, but it was actually launched in November of 2021. There was no pre-mine, there's been no pre-sales, and there's no coin allocation. So just one day, they basically just started it up, opened it out, and then people could just start mining it from the first Genesis block and go from there. And there are going to be 28.7 billion coins within circulation. We're currently in and around 18 billion of those. There is a release schedule, which I've got up here. I know Simon went through this, but just to clarify, so what happens is there's a halvening event, in inverted commas. It doesn't actually halve, but I'm too thick to work out the maths is, and that occurs every month. And so I think for the first 6 months it didn't, as you can see here, but then every month after that, so must be the 8th, must do it on the 8th, or roughly the end of the first week of each month. This is an American date system, so you got to remember the months are going first. But you can see that it changes every month and it drops down, and the drops do get smaller and smaller as it goes along. I don't know what the actual drop is, but if you're particularly good at maths, you can see that it's done via a smooth monthly reduction by a factor of 1/2 over 1/12. I don't know what that means, but it looks like this lovely curve comes out. So obviously, as Simon said, there's a huge amount of distribution and release of tokens in sort of the first, I don't know, 10% of the time period, and then the mining rewards get less and less and less, and it just goes on and on and on. I think this is all the way up to 191 months. But if you go back to the scheduled release, yeah, they got it to 186 months, which is 2037. And by then it's 0.001. So yeah. So we can kind of see what the emission schedule is, and we know where that sits. But how does that actually look with all the charts and everything today? So bit of conflicting information, which is always good. We'll start with what we can see on coin market cap. Current price at the moment is 2.5 cents. It's just down a little bit from its opening today. We've got a market cap of $467 million, and a fully diluted market cap based on that price of just under just under $740 million. It's got a 24-hour trading volume of 13 million, which I can assure you only about 3 hours ago that was at 8 million. So it's had a hell of a jump up today. We'll go through the charts a little bit better. In terms of markets, yeah, it's not really on many markets at the moment. Gate.io, MEXC, it's just announced it was on LBank. I don't know. I actually thought it was the 27th. It was going to launch on LBank, but perhaps not. It's going to launch on BitGet as well. That's just been announced. So it's starting to build up on some of these exchanges. Those of you that have been interested or even bought it, I think you've probably already signed up to MEX. And that seems to be where the majority of the volume is. Now, in terms of the contrasting information, so this is ranked at 213 on CoinMarketCap. But if you go to Kaspa on CoinGecko, it's at 95. but the figures are relatively the same. Circulating supply is slightly different, and obviously the market cap, because of the circulating supply, is different as well. So it does throw me a bit, but in terms of market cap, we're only talking about 22 million. And I can assure you there's not a difference of 120 places just on 22 million. So I'm not necessarily sure where to believe. I personally think, well, if we go to Kaspa and just go to coin market cap, it says it's 95. 95 here. Actually, look at that. So if it is 400, it should be there, 87. But for some reason, it's not. And I'm stumped if I know why. Kaspa. Am I just being really thick there? I did just see that, right? So Kaspa there's 467 market cap column. Why can't I go back to the first page? You know, we're already below 400 million. There's something wrong with the UI there. I don't get that. But on page 186 is 480 million. But then when I go to page 3, some of these market caps are all over the place. I'm struggling with that one. I'm a bit confused. I was checking in the comments to see if anyone was just saying you're being an idiot, you're looking at the wrong thing. But anyway, right, well, ignore what I just said over the last 2 minutes, because maybe there isn't a difference. Maybe it's just the UI on CoinMarketCap isn't functioning correctly. I'll try and get to the bottom of that, but that seems really weird. There's got to be something wrong with that. Anyway, let's just move on, shall we? So, tokenomics, you can kind of see, I mean, all this information is available on the website in terms of circulating supply, tell you how much has been mined already, and the block rewards. And you know, you kind of forget sometimes because we don't really look at things like Etherscan that often, or any of the others. But this is right in your face off the website. You can actually have a look at their block explorer, and so you can find any transaction you want. You know, every transaction that's ever been held is held in the register, and you can go through and you can click on it, which is, you know, interesting to say the least. But if we just go to, is it this one? Nope, next one. Here we go. Yeah. So if you go to the CAS and then there's a frequently asked questions, you can click through. You can have a look at the dashboard of some of the tokenomics there, and you can kind of see real-time transactions per second. At the moment it's around about 4.8. So yeah, moving through quite nicely. There's a reduction in 12 days, which probably ties in with what we saw before. What I'm actually interested in is it tracks whale movements. So anyone that has a particularly large amount of CAS, which we know Siam, because we saw him buy 4.8 million, so he's going to be in one of these somewhere. It tracks those, so you can have a look and you can follow that. Similarly, it kind of talks about address distribution, which is quite interesting, sort of what they categorize each as and how many of them there are. So there's one Aquaman, so one wallet has over 1 billion. Humpback whales, 6 wallets have over 100 million to 1 billion. A whale is 10 to 100, there's 169 of those. And a shark is 1 million to 10 million, and there's nearly 2,000 of those. So there's an awful lot of wallets, 287,000. But actually, in terms of decentralization, and getting back to that decentralization point, only the top 10 wallets only own 19%, or just under 19%, which is actually incredibly low. Now, I did double check this, and you'll have to trust me because I had to get my calculator out to add it all up. There isn't a fancy little calculator that does it. But if you look at the top 10 Ethereum wallets, it's nearly 27% of the Ethereum wallets are held. 27% of all Ethereum is held in the top 10 wallets. Now, you know, you can see the names of some of these, and they're all from exchanges, so that's absolutely fine. But just to show you that it's actually held quite a lot there. But you go back to Kaspa, which is incredibly decentralized. These are individuals, and only 18%, 19% is owned by the top 10 wallet addresses. So that is a good tick there. It does tick that decentralized box that we talked about. And the top 100 addresses only have 36%. Now, I didn't bother adding on my calculator the top 100 addresses for Ethereum. Maybe someone can find a website other than Etherscan, which could work that out for us. But yeah, it just goes to show you where all of that is. So, you know, it just gives you the top 1,000 addresses here, so you can go through and have a look for wallet sizes and addresses. And, you know, this whale here, if you are significantly invested in Kaz, you might want to follow this, because if he starts moving stuff out of his wallet, it might be time for you to move it as well. So yeah, you can just click on it. It tells you all the transactions. I mean, he's moving, he, she, they, moving a decent amount. They move what, nearly just under 10 million there. And then you can click on the ID and it can tell you what was all sent within it, where they were all sent to. You can follow it just like you can with any other blockchain. So that information is definitely available for you, and just, you know, great kind of stuff if you're a bit geeky about all of that. I talked about the dashboard. It does have a good community. You know, this their Twitter following. I've joined their Discord. I won't bother getting it up because I'm not going to stay in it for too long. They've got thousands of members active all the time. It's kind of hard to keep up. There's so much stuff going on in the Discord. But what I think is impressive is they've only tweeted 280 times, but they've got nearly 50,000 in followers. And actually their level of engagement's pretty impressive. You know, 19,000 there, 12,000, 35,000. You know, it seems like it is a genuinely well followed account with a good community, which makes sense. You know, a lot of these mining tokens, they do have a good community because it's people that are invested in actually the cryptocurrency itself, because they're actually mining it, that are interested in it. And because they have such a say within how this is run, because it's solely run by the community, then of course they're going to be interested in all of these things. And you know, you can go through and look at all that at your leisure. What I would say though is I do have, oh no, I won't get onto this. The other thing that is positive is it isn't on a major exchange yet. So it's at $2.50. I think it got up to, I didn't cover it, did I? I think it got up to just under $4 as its all-time high. It got just over, it's a $4, sorry, 4 cents, just over that. And that was at the beginning of April. I'm going to look at the chart a little bit later on, so I'm not going to bother doing any charting at the moment. So it's just under halved that at the moment, but you can kind of even see without us getting the chart up that it was a pretty meteoric rise. So a pullback was to be expected. But it isn't on a major exchange yet. And if it ever does get picked up by a major exchange, like Coinbase or Binance or what have you, then you could see a positive springboard from that as well. Now, I'm kind of jumping the gun a little bit here, but I know for a fact that, you know, to get listed on Binance, it costs an awful lot of money. And because there was no pre-sale or anything else, we don't know what amount of funding they necessarily have to cover things like marketing, etc. And the marketing does seem to be relatively dry across the board. You know, I'd never heard of this token. If it is in the top 100 and never to have heard of it, it's kind of surprising, especially given how relatively big and active their socials are. So there does seem to be some form of that missing, and maybe they are going to struggle with some of the big exchange listings. But even the listing on something like KuCoin, which most small altcoins go to in the first instance, I'm sure would see a positive impact on that, as long as they could get the liquidity to meet the need. So the fact that it's not on any big exchanges and we've still seen this meteoric rise over the last 6 months is a big tick to be had. I do want to cover, because it feels like I've probably spoken about this very favorably to start off with, but there are some concerns that I have, and it's only right that we sort of try and address those. So my biggest concern at the moment is probably its competition. Now, whether you want to look at it from a proof of work point of view or just from a layer one point of view, it is entering into an incredibly busy market space. And we just take the proof of work tokens here, and we have got some big boys: Bitcoin, Doge, Litecoin, Monero, Ethereum, Bitcoin Cash. Yeah, you might not believe in that. Bitcoin SV, and old Craig Wright over there. Zcash, Ravencoin's another mineable token based on Cardano, however you want to pronounce that. So we've got some incredibly big competition, and going back to, without that marketing budget to drive it, is it going to have that momentum it needs to take market share from some of these? I don't know, stranger things have happened in crypto, but that certainly should be something that you consider, just what it is up against. And if you want to have a look at it from the layer one protocols, it's probably even scarier. But we're taking on the likes of Bitcoin. It's a peer-to-peer payment. It's what it wants to be. It wants to be known as the peer-to-peer payment. Well, if people aren't using Bitcoin, what is the one that they use the most of at the moment? Well, it's Ethereum, isn't it? So it's got to try and take on Ethereum. And if it's not that, what about BNB or Cardano or Solana or Polkadot or Avalanche? These absolute huge names, Hedra, massive ones there. And we're not even on the chart yet. Phantom, all these ones that did incredibly well in the 2021 bull run and have got an established use base at the moment with an active ecosystem in which they're being built off. So it's definitely got a lot of competition, and despite any positivities that it might have in terms of what it can do, ultimately it's got to also disrupt. And if it can't disrupt and take market share, then it's going to struggle, because people don't know about it, they're just not going to use it. And so I think that needs to be taken into consideration. My other concern goes back to the fact the seed round, if you will, because it was no pre-mine, no pre-sales. It doesn't have a funding, it doesn't have a runway that we know of. And so we don't know when that money's going to run out. And what's even more worrying is that on every single page in their websites, they ask for donations. This company's worth $500 million, and yet it needs to ask for money off its community. That doesn't seem right to me. Again, a little bit of a concern there. $500 million, it doesn't have a single dollar. I'm sure it has some, but it doesn't have enough dollars in the bank where it doesn't have to beg for people who come to their website for funding. So again, something that I would be concerned about. And then we talk about use case, and we talk about an actual real world use case. Well, this is being used, but not exactly well. There's Penguin Company in Dubai. There's one hotel in Turkey, Istanbul, that uses it. King's Cross Hotel. Sorry, there's two hotels in Istanbul. There's some sort of GPU mining rig company and another technical store in Turkey. And again, this is supposed to be, its use case is for a peer-to-peer electronic cash system. And this, I appreciate it's relatively new, but I just want to throw it out there that if this is something that you are wanting to invest a significant amount of money in, it doesn't have an actual use case at the moment. This is hobbyists that are mining this token and holding onto it, hoping it's going to go to the moon. How do I know that? That's because exactly what I did in 2018, 2019, 2020. Now, yes, I had one success, but I had many of them that didn't succeed. And that's just part and parcel of it. So this doesn't actually have any real world use at the moment. It's been used in 10 stores. So maybe I do it a disrespect there. But you get the point I'm trying to make. Is we've never heard of it. We don't see people talking about it necessarily. It hasn't disrupted those markets yet. Hasn't even disrupted its own proof of work or layer one systems. Never mind disrupting the traditional finance system, is using this as an electronic peer-to-peer payment. So just again, be careful. And maybe I am being a bit harsh on that there, because it is still relatively new. But the reality is, if you're going to be putting a lot of money into this, you just need to add that up within the risks. And we always talk about, when we do these research tokens, about a use case. That's one of our primary factors of whether or not we're going to invest in something. And unfortunately, that isn't there yet. Doesn't mean it's not going to come, but it isn't there yet. And so potentially you want to be considering whether or not this is something that you want to invest in. Now, if we actually have a look at the chart, this is what we can see. The chart actually only goes back to October 2022. But as I said, it was actually released in November of 2021. Now, the data, the price of that, didn't necessarily go back too far, but remember when I talked about Jonathan Sopolinsky, and he had that Medium page where you can go on, you don't have to subscribe to him, you can read some articles. where he talks about a catastrophic failure that happened. I think it was in June of 2022, where there was just a massive sort of like glitch and problem that went ahead. And so the price dropped massively. I'd say massively, retrospective to what it was, but a significant percentage drop happened. It looks like they corrected it, so I'm not trying to FUD that there, but I just know that this was circulating around prior to what we can see on the charts. So this is probably just the listing that it had on MEX, and I'm sure there's some small exchange that it was on prior to that. And so it does look like a pretty impressive growth, and what you can suggest is that actually we've seen that rise up and we're just seeing a bit of a pullback, and we can start drawing some lines on this now and maybe start trying to find something. I don't really like that one, to be honest, I'm going to be severe. But there's definitely something that's happened over the last week or so where it is just hitting this support line, just bouncing back up. Now, there's two schools of thought. So it's either just going to snake along because it's consolidating, or every time it's hitting in, it's weakening. So that's down to you for determination. I kind of look at it a little bit different than that, and I'm going to use my good old market maker kind of ideas. So I'm going to have to throw on a few of these lines just so we don't need market sessions, so we can have a bit of a better look at this. And I'm kind of seeing, where are we in terms of the move down? And I'm trying to find, we've obviously had a bottoming pattern somewhere. Where's that? And then where are we from that? And I suppose initially I'm probably looking at maybe this is the W pattern with the first rise up, breaking through the 50 EMA. Then it's consolidating back down, so I have a retest there. And then so that'd be rise 1. And this being all of rise 2 with a pullback and consolidation period, so in and around there, but coming back to the 50. And then this being the rise 3. It's the daily chart, remember, by the way. And potentially having that uptick there. Now the question is up for interpretation in terms of, well, where are we in the move at the moment? And I think there's two schools of thoughts. So W's, double bottoms, normally reversal pattern, meaning we're going to see a rise. But at the top, we're looking for M formations or double tops that potentially could indicate that we've got that reversal coming again, or it's going to fall back down. And so you could either say there's an M formation here with a drop 1 happening, maybe completed, resting on the 50 EMA, or you could look at it and say that's not where it is. This is all the first part of the M. Maybe we might look to see an uptick before further falling down. So we've certainly got to be bearing that in mind. I kind of do think that we have completed the rise 3, and so whether or not we're interpreting this as a drop 3. Now, if this is something that you believe in, you follow, you could always then take it down to lower time frames to have a look at it. But I don't really have the time to necessarily do that at the moment. But hopefully you get the point I'm trying to make there. But if this is an M formation there, and then this is drop 1, consolidation, we potentially have 2 further drops to go. Now, I have no idea where those drops are going to happen, so ignore the squiggle. But you get the point that actually we may have a bit of further falling to go. And we do have some vector candles that we could look to recover. Remember, vector candles are just increased amounts of volume over that particular time period. So get rid of that there. Drawing your boxes on there, something you may want to have a look at. We've got potentially from about 2 cents to about 2 cents and 0.22. Don't know what you'd define that one as. And then we've also got this one down here. So potentially is somewhere we can have a look at. And if you really want to throw cat amongst the pigeons, you could say, well, we could throw a Fibonacci retracement and see where that happens. So if we take it from this swing low to this swing high, and at the moment we hit the 382 perfectly, and we're now finding that support. But we lose that. The 0.5 is going to take us lovely back into this vector candle, almost 50, well, just over 50% of that vector candle as well. Look to take that one out. Now, the next one's down, kind of straddle in between the 618 and the 786. I think we'll just have to wait until that plays out. But I'd certainly be looking at around about the 2 cent marks. If you're not in already, there's a potential area to start thinking to get back in. And so, yeah, so that's where I see sort of the price action at the moment. That. One final thing that I just want to comment on, because I noticed that Simon said it in his exchange. I just want to give my view on something and potentially clarify it. Kaspa is not SEC proof. Okay, I just want I'll caveat that in a second, but let's just be clear. It's not SEC proof. It's not been acknowledged like Bitcoin has to say that it is definitely not a security. We don't know if the SEC is going to determine this as a security. I can understand some of Simon's thought process within that, particularly around the fact that there was no pre-sale, no pre-mine, etc. And so, does that fall down in terms of the Howey test, in the fact that you had to invest money in the first place for a third party to then go and do some work for that to make money on your behalf? Well, you would argue that actually, because there was no pre-mine, you just started mining it yourself. You didn't give any money to anyone else. You mined it. So I completely get that logic. But the reality is, and I mean, there's loads of articles where he said this, and he said it even last week when he was in the Congress meeting, or the day before, actually. He bumbled around it in the actual meeting, that everything other than Bitcoin is a security. So at the moment, his stance is every other crypto, doesn't matter if it's another proof of work token, every other crypto other than Bitcoin in the SEC's eyes at the moment is a security. And so if that was one of the final things that led you to go, you know what, I'm happy to go in because it's SEC proof, there's no actual confirmation it's SEC proof. There's an assumption that's been made that it is SEC proof. And I'm not saying that's not the wrong assumption, but right now, I just want to clear that up. So hopefully that helps with particularly clearing that one up. For me, I'm not particularly looking to invest in this one. I think, one, it's far too young. I think, two, its lack of use case worries me. Three, I don't know what its funding is. I don't know how well it can survive. Four, it's effectively just being mined by hobbyists at the moment. Yes, some of them may have large bags of that. I get that, but ultimately, until it has a use case, where's it really going to go? Which is kind of similar to Raven coin. That's the one that I had success on. I don't even know if that is being widely adopted at the moment. It did have a really good spike at one stage, which I was able to get out of. But, it's kind of just meandered around. That's been around for years and it's not really achieved much. So I like the idea of what it can do. And although I don't know much about block DAGs, it certainly seems to be a very impressive piece of technology, which certainly seems like it could help everything there. But as I say, for me, I'm not particularly invested. Now, if this thing drops below 1 cent, I might put a little bit in there just so it's on my shitcoin list and I can keep an eye on it for people that are in the group that perhaps won't keep so much of an eye on it. But at 2 cents and 2.5 cents, whatever, I'm not necessarily interested right now. Will I? Maybe I might regret that. Well, you know what? There's 20 odd thousand tokens out there. I'm not going to hit them all. And I've got my own sort of criteria within that. So yeah, that's my views on Kaspa. I kind of hope it helped. If you have gone into it and you're feeling particularly nervous about that now, well, hopefully that's a lesson that, maybe you need to make sure you do some research beforehand. On the flip side of that, if you haven't gone into it and everything I've said's really made you happy, then I'm glad you had the patience to wait, and you still should do your own research, but at least you have some ideas of where to go to have a look at those. Just have a look at some of the questions or comments. In ancient Egypt, silver was rarer and more valuable than gold. Okay, there you go. Something very wrong with CoinMarketCap sorting UI third page starts with 11 billion, whereas the second page ends with 200 million. Yeah, I don't necessarily get it. BTC pushing under 28k. Yep, is at the moment. And we'll cover BTC price in a matter of minutes. Do you still see Litecoin as being a leading indicator, the BTC price action? It's held up pretty well. So, we covered that a few months ago now that, Litecoin is going to have its halvening this year, and that normally runs, and then it does exactly the same afterwards. It pumps again, and that does seem to lead BTC. And we have seen that in the year before BTC halvenings, there has been sort of these, they do feel like major pumps at the time, to be fair to them. It's nearly 100%. Excuse me. So we can't say it was a minor pump, but then there is typically a correction before then the rally into the halvening, which kind of starts around about 6 months out. So it is a bit of an indicator. I've seen no evidence to suggest that shouldn't be the case. If we just throw Litecoin up now, just so we can have a look at it. Again, it's had a good run. It's continuing making, this one didn't quite make a higher low, but it's still marching up. I don't know when the exact halvening date is. I don't think it's that far off, actually. But I'll have a look into that. Okay, there was one other thing that caught me at the end of Simon's video, which, again, I just wanted to clarify because it's exactly the same kind of message I just said about Kaspa. And that was on GMX. So in the same iteration, he just went on to suggest, he didn't outright say, that GMX is another one which is SEC proof. And again, I don't necessarily think that is. So I just want, I assume a lot of you have probably already bought into this and you buy into the website and everything else. That's absolutely fine. The website, the exchange, sorry, that's absolutely fine. But just to clarify that GMX actually, I think, is more at risk than Kaspa is. And there's a couple of reasons as to why. Well, I'll start off with the first one. So you probably aren't aware of this, but GMX actually started off as another company. It was called Gambit Foundation, I think it says here. Gambit Financial, and it looked a little bit like this. It was still, you could still go about and do trades on it and everything else decentralized. But what happened is back in, I don't know, end of 2021, beginning of 2022, Gambit decided to go for a rebranding, turned into GMX, and then all of these tokens, the XFIX, the GMT, the XLGE, and the XGMT, the project made it possible to swap these assets at a rate of 2 USD for 1 GMX, so you could then effectively convert across. But Gambit Financial actually did have a fundraising. So, it undertook a fundraising. So although it's got a new name, fancy name, and a fancy new logo, its origins actually did have a seed round. It did have some fundraising, etc. And so there is potential that actually it might fail the Howey test depending on how securities go. But I'll take it another step further because GMX has a GLP, which is the GMX liquidity pool. And you look at what's in the liquidity pool, and there are altcoins in there that potentially could be deemed as a security. And if suddenly they get hit, they're in their liquidity pool, that's going to have a knock-on effect on GMX. And it's not just in the SEC. We talk about that piece of legislation that's been brought in about trying to ban decentralized stablecoins. Well, DAI was specifically mentioned, and I actually even think that Frax was as well. Now, it's a long way off that piece of legislation coming in. I'm sure it's got many amendments to it. We covered that a lot last week. But I'm just trying to say that there is potential for it being susceptible to any SEC regulation. So just once again, there is no cryptocurrency asset other than Bitcoin that has been confirmed not to be a security. So if that is one of the tick boxes you need to go into a token, just bear that in mind. GMX hasn't passed that threshold yet. And in my opinion, neither is Kaspa. I think Kaspa technically could fall under the Bitcoin umbrella, but the SEC have got just a funny way of how they decide to administer the rules for regulation in the cryptocurrency world. So just take that all with a pinch of salt. Right, enough of Kaspa, enough of GMX, and we'll close that one down and we'll bring the other page up. Okay. Let's have a look where we're at. Greg, I remembered your first comment about the monthly, so let's throw on the monthly chart and see where we are. I mean, actually, let's just do this, do that. So this is, I mean, we've had this chart for years now, and the 29,000 is the line that we're kind of looking at there. So just ignoring the potential high test at the moment, this was the level on the monthly that we sort of addressed last month to say that we're looking at 29K. We break and close above that. We're looking at 37. We don't close above that. It's either going to be a retest of 29 or we're looking at potentially 23,000. I think, with 5 days to go, so still plenty of time, that's where we're currently positioned at the moment. So we are under the 29,000. That's the level we need to break. We break and hold above that, we can start talking about going to 37,000. But until we break and hold above that, there's no real point in discussing it. So yeah, I don't think anything's necessarily changed in that picture. In terms of the high test that you mentioned there, I mean, if the candle were to close, I wouldn't class it as necessarily a high test, only because the wick to the downside it's pretty decent. Now, I appreciate when you mentioned it about an hour ago, we hadn't had the $600 rise that we currently had. So that red body was a bit further south than it currently is. But right now it's kind of looking a bit more like a spinning top with a decent leg to the bottom. And, you know, it's not quite an indecision candle in which both wicks are equally length and the body is sat perfectly in the middle. But for me, it's not really telling me anything from that. If I'll have a look at Ethereum, which I've not really done, see, Ethereum's looking a little bit of a different story, actually, especially with when it was down at about 1812 earlier on today. And that actually has a pretty long wick to the upper, to the north, if you will, and a slow wick, a short wick to the south with the body relatively close to that. So that one's looking more like a high test candle to me. I'm sure if we break that down onto the weekly or whatever, you'll probably see some form of compression based out of those bodies, just because it looks like that's what's happening in there. Maybe not. Kind of is, I suppose. But yeah, I mean, there's a lovely low test that then kicked up to where we are at the moment. But anyway, going back to BTC, I'm throwing it onto the daily and just kind of seeing where we're currently sitting. So again, you know, we hit that 31 and a bit thousand, and we've had that pullback from where we are. So we just initially throw a fib up from the bottom of here up to where we're going at the moment. I think we did this last week. It just didn't really sit very well, did it? Well, I'm going to take that off. I don't think that's really telling me too much. I mean, I'm trying to stick body to body. I'm kind of fudging it here, and even if I go wick to wick, it's not really telling me too much. So if I just stick with body to body, just have a look at potentially some of these levels and then just see where we are. I mean, what we are struggling to get across back above, is a 236, but we haven't really hit the 382, which we had a few decent connection points down here at 26,500. So we had something else has turned us around there, which we can have a look at in a moment. I kind of know what the answer is already. So just leaving those fibs up, you know, for me, because we have, you know, we've pulled back from this high here. We don't know where the turnaround point is. I would still be identifying my initial one. I mean, obviously it's 26.5 at 25,000. It's still the level I'm looking at in terms of this previous price resistance there that could then potentially turn into support. The psychological level of 25,000. We'll go on high block a little bit later on and see if there is anything that ties within that there. But if I then just throw, where did I have? Nope. Oh, I know where it was. I'll tell you what, sod it. Sorry, I wanted this one. So just putting it back on the daily. So yeah, can be a bit messy, and apologies there. I'll zoom in so you can see it. But what has turned us around, as you can quite clearly see, is the 50 EMA. So, you know, the last 5 days we've bounced in and off that, and so, you know, it's always a magnet, the 50 EMA, but we are still under the 21 EMA on the daily, and you know, it's then a case of, okay, well, what pattern are we potentially looking at? You know what I like to do, because we've already done it with Cadena, it's not Cadena, bloody hell, Kaspa. So where we are. So from a daily point of view, you know, we've got that W formation, that double bottom that we've had there. We've had that rise 1, potentially then the consolidation period down to here, rise 2, and maybe consolidating down here. And then that could actually mean that we've got one more rise to happen. Now, a rise doesn't always have to take out the high, although you'd kind of expect it to. And maybe we've got that run there. How long that takes, I don't know. But it's taken us 6 months or 5 months to get up there. So we'd be at the top of rise 3 looking for a double top M formation and fall back down. And again, we may end up then seeing sort of, you know, 4 to 5 months for that to play out back to the downside, taking us in and around that 6 month time frame before the halvening event. And you know, some of these things, oh god, I do it all the time. Some of these things I talk about, you kind of forget how long they actually do take to play out. So potentially on the daily, actually all we're seeing at the moment is that break from 31,000 down to the 50 EMA is just a consolidation pullback period from the rise that we had from that last dip. Now, actually, it may not hold here. It's interesting to see that it is holding above the 25, sorry, the 50 EMA. But it could fall all the way down, even into the low 20s, and still not invalidate this entire structure that we've got here. So we've got these vector candles here, which could play in. We've got this 800. Let me just double check if it is the 800. 200 EMA. It's moving along. Obviously, that's going to climb up and up and up, and maybe get to that 25 level we're talking about. We've certainly got those vectors. So that'd be stuff that I'm looking to mark up. But then if I just remove all of that, I drop it down to the 4 hour. I think things are a little bit cleaner, certainly for me anyway, on the 4 hour chart. So what I'm seeing here, you can draw it out, is we've had our rises. This one here is what is rise 3. In my opinion, just my opinion, it's gone back down. It's hit here. It's formed that M formation. So that's the M formation. That was rise 3. And then we're looking to come back down. Now, this is technically, we're still in drop 1. Whether or not we this is a consolidation period in drop 1, or it's just waiting and it will continue to fall back down, we'll have to wait and see. I kind of think this is potentially a consolidation period. And what's this spike up over the last 8 hours? Well, all we're doing is we're moving back towards the 250 EMA, which is also at about 28,000, which is an incredible bit of traffic there. I'm just making it a little bit bigger so you can see it. Incredible bit of traffic for it to get back through. So nothing particularly unnerving about seeing it going back up to these levels. But as long as it's currently trading below the 50 and the 800, for me, this drop 1 consolidation leading into drop 2 is a play. What I'd like to see is a sharp move after hitting the 50 EMA, is a sharp move back down, creating that vector candle, getting that in there, showing that we've got the momentum. Then that's going to look more like it was a consolidation period into drop 2. If it just starts to slowly eep its way down, it's probably still technically drop 1. Or so I understand how those work. And that, going back to the daily, could still play out. We could still have 3 drops here before that meteoric rise back up to the 32, 33 level we talked about before. On the daily, we start looking at completing the rise 3. That's what I mean. Once you start to find these patterns, you then try and take them down the time frames to just see if they tie in with where the pattern's seeing. And for me, this one seems to fit. Particularly this drop 1, vector candle through the 50 EMA, continuing to fall. I mean, this vector candle is obviously being recovered now. There's still this vector candle up here. So, a move up to 28.5 to 29,000 is not necessarily off the cards. It could actually even come all the way up to 30,000 and not invalidate this current structure. So maybe you might suggest then that actually I was wrong. What's happening? Just delete that. If that were to be the case, then maybe that was the M. Maybe that's it. But at the moment, I'm sticking with how I drew it previously, with the M being there, and then this being potentially drop 1 on consolidation period. In terms of areas of interest that we can then mark up. So we talked about 25,000. So some all the way down here to eat through that. It's not a huge amount. The colors, actually so that's 13 billion. So by the time you got through all of that, probably talking anywhere about 50 billion. But you can see we've cleared out this level here. So there's nothing really close to us at the moment. So it could go in either way, but then again, up to 31,000. But that level I was talking about, 30,000, there's not really too much there. Wonder if that builds as we go. But there seems to be a bit more activity down south. So again, this is where high block, I use it after I've had a look at the charts, because I don't think this is really actually telling me. This isn't giving me a clear direction at the moment. And yeah, I could go through and cycle through the time frames and see if anything changed a little bit different. But right now, I'm not getting much from high block. I've got the areas of interest, and I'll just see how they build up. I've not bothered getting up trading light to have a look at the order books, but you could throw that in there to see how the orders are stacking, buy and sell orders in and around those levels. In terms of some other tokens, let's just have a look what else we've got. So again, Ethereum is having that nice move back up. It's a kind of a similar situation. We've had a decent drop I mean, on the 4 hour, yeah, I suppose there is the M formation there. Not as clean, but I suppose I could be arm twisted into drawing something like that. Strong candle down through the 50 EMA, breaking back down these levels, and then yeah, I mean, this, if anything, could still be the drop. You know, this doesn't add as much sideward movement. It's still sort of moved down. Yes, the last 8 hours have shown some upwards trajectory, but again, the 250 are in the way. So maybe 1760 is a target we should really be looking at and seeing how it consolidates there. I won't, you know, you can play the market maker pattern however you want. I've kind of talked about that in those now. In terms of dots, so dots had a, let's just take these off. Just leave trades reality one on. Oops, didn't mean to do that. The dots had an interesting fallback down. It's kind of resting on previous levels in. Where's my angle? Down here at the moment. And then if we were to take that onto the daily and have a look at what that's kind of showing us, it's kind of picking up a bit of noise there. But, you know, we lose that. And I'll draw the fib extensions in a moment. But really, we're kind of looking in and around that level there. Sort of low $5 level. So it's these wicks on the daily, it's hitting this, it's bounced off. We've seen long wicks off this level before, so you know, obviously it does these bounces, but you know, for the last 5 days it's dropped down to, you know, $5.75 and then back up to $6, and it's still been doing that. So we have a look at some fib extensions. I mean, if we take this one to this one at the moment, that's the battle it's having, pretty much between 786 and the 618, and then the extension's down. I mean, if it loses that box, $5 and below, you know, great times. In terms of where I've been, you know, I'm not particularly phased by this move. I bought some dot at $6.70. It's just been adding to it periodically. I've also bought some again recently when it was under $6. So, you know, again, my mindset in terms of where I'm at, I'm quite happy to be buying that, just building my position. Yeah, the $6.70 in hindsight maybe wasn't the best play, but, you know, it's bought, it's staked, it's just added to that position there. The overall amount, I'd have to get the spreadsheet, but I think it's still in the low $5. So I'm happy with where that one sits. In terms of some of the others, I don't know if many of you are in anyone, so not bothered. Glimmer's an interesting one for me because we're actually pretty close to all-time lows again. Now, I'm not going to do anything if it gets there, but I've got a fairly decent Glimmer size bag now. I think the only way that it's actually probably still in the green is because I've staked, because I think my average buy was around about 37, maybe 38 cents. So I'm under that. But I'm just sitting with where it is. And then, yeah, it's still got unlocks coming along. Yeah, this year's quite a lot of unlocks, and then tokenomics kind of changes drastically after that. But 32 cents is really what I'm looking at the moment, or 31.5 cents for that one. Link, you know, it's done exactly what it's done for the last year. So, you know, I talked about it before with that two areas, $9.50 down to $7.50, and then change the color. That is there. Apologies, sorry there. Let's just change that color to green and green, and it's just been playing in that range. So yeah, a week ago we had it punched through, but it's just turned back around. But it's done nothing. And for me, anything under $7.50, I think it's a great buy. This is a huge amount of consolidation it's had for 12 months. This is building a hell of a floor for it. And yeah, we might get it down as, if we're lucky, down as low as $5.50, maybe even lower. But ultimately, this is going to prove to be a sound body for the next bull run. So again, I'm quite happy with that. Matic's finally lost $1. Again, I've probably bought the wrong side of this one, but it is what it is. Where it can now go, I mean, I think 80 cents, maybe 90 cents first, but I'm looking really at this bottom 80 cents down here. What's happened with my chart? Put this back on. Oh, I know why. because of this. Let me just get rid of this. The size of the column on the right hand side was crazy. So yeah, I'll be looking at that in terms of extension, whether we want to throw it up there. So 88 cents at that, just under 90. And then, why did I say 80 before? It's quite clearly much lower than that. It's actually around about 70 cents where we're looking. So I kind of, yes, I bought at the wrong time there. I'm not fully in my Matic bag. Seems to be heading back down, and I'll just be happy to hoover up. If it does get down to 90 or 75, and I'll probably end up filling my bag there and just accepting if it goes lower. Near, again, you know, a lot of these we've seen just that turnaround over the last few days. Yesterday has pumped it, but I haven't put the 50 on here. There's the 50 EMA. All the other ones have just hidden. There's no point seeing them, but you know, it's not surprising to see a pullback after a fall like that. So we've just got to wait and see where the sentiment is with the markets. OKB, it hit all-time highs or near all-time highs. It's just retracing, but this one's actually reacted off this 50 EMA, so potentially maybe an uptick from that one there. Rose and Quant, fine. What do we go for them? Gas, BTC. So I'm already in gas, BTC. I think I was, in terms of dollar value, I think it was 336. So around about here. In terms of BTC value, oh wow, it was about 11.30, I think. But anyway, I'm in the red of it at the moment. We are getting very low at the bottom of this. I'd like to see some sort of spike. I might have a look at some of these levels and just change them, because at the time when I got in, they were 20, 30, and 40%. Obviously, where the price has gone now, I might just need to reevaluate that and see where that one goes. Yeah, that's kind of about it on some of the other ones, unless anyone's got any particular token they want me to have a look at. I'm kind of where I'm at with that. No. Okay, everyone. Thanks for persevering. I'll tell you, but worried about how long it's been since a gas spike. I think maybe taken for granted how often the spikes. Typically, it's about every 4 to 6 weeks. A big spike used to happen, but you can see there were some big gaps there where they didn't. Now, that wasn't a spike, but it was a decent climb. But yeah, that's kind of unfortunately how it goes, and then you just get some crazy ones. The thing is, I think just greed sometimes. You know, some of these here would have been 20% spikes, and now you might get a 20% spike that doesn't take you past what would have been 5% when you got back in. So it's just trying to reevaluate where that is. And I'll be honest, now that Simon's done it, there's probably a lot of people in RT that have done it, and so we've got almost an opportunity or a problem where we're fighting ourselves, depending on where we set some of our levels. So, you know, the reality is you're going to have to consider that. And I've just realized I got my face cam on when I was talking about the charts. But yeah. But anyway, yeah, thanks everyone for tuning in, especially on a Tuesday night. I'm trying to decide what to do next week. So obviously we've got the bank holiday on Monday, which I'm out. So I'll probably be, all honesty, a bit hungover on Tuesday. So I might move it to Wednesday. I'll just have to wait and see. It's just whether or not I've got the brain capacity to do a research token on the Tuesday daytime. But I'll make that decision before the weekend. Or I guess just say, hope you guys have a great week. If you've got any questions, you want to put any recommendations through, feel free to drop me a message in Discord. And other than that, I hope you enjoy your evening. And yeah, have a good night, everyone. Thanks a lot.